the news hit like a thunderclap. Hyundai Motor Company is pulling out of the US market entirely. After decades of growth, innovation, and a reputation for value, Hyundai's sudden exit sent shockwaves through Wall Street, dealerships, and millions of American homes. This isn't a slow retreat or a strategic pivot, it's a full-scale withdrawal, effective within 18 months. The company blames regulatory hurdles and a global realignment, but analysts point to fierce competition, trade tensions, and the massive cost of the EV transition. The shock is magnified by Hyundai's recent successes, surging sales, acclaimed models like the Palisade and Ioniq, and a brand at its peak. Hyundai's stock plummeted, while rivals like Toyota and Ford surged. The void left behind is massive. Affordable sedans, feature-packed SUVs, and accessible EVs suddenly vanish from the market. Consumers are left in limbo, worried about service, parts, and resale value. The US auto market has seen plant closures and model discontinuations, but the complete exit of a top 10 player is unprecedented. This is a seismic event, shrinking choice and competition at a time of high prices and economic uncertainty. Over 700,000 annual sales can't be replaced overnight, forcing a fundamental re-evaluation of the industry's stability. Hyundai's American journey, once a model of success, now ends abruptly, leaving the industry breathless and uncertain about what comes next. To understand the impact, look at the numbers. In 2024, Hyundai and Genesis sold nearly 800,000 vehicles in the US, about 5% of the market. Hyundai's Alabama plant, a multi-billion-dollar investment, employs thousands and anchors a vast supplier network. Its closure is a major blow to American manufacturing, erasing a key hub from the industrial map. Over 800 dealerships, spanning coast to coast, represent billions in local investment and thousands of jobs. The termination of franchise agreements will trigger financial distress and local economic disruption on a scale not seen since 2008. Hyundai's influence in the EV market was growing fast, with the Ioniq 5 and 6 challenging Tesla and legacy automakers. Hyundai captured a significant share of the non-Tesla EV market, offering affordable electric mobility. Its exit shrinks the competitive field, potentially slowing EV adoption and giving rivals more pricing power. The loss of Hyundai's innovative affordable EVs is a setback for America's electrification goals. The numbers make clear. This is a loss the market can't easily absorb. The immediate victims are Hyundai's 800-plus franchise dealers, independent owners who invested millions in showrooms, tools, and staff. Their business model is now obsolete, and their investments have lost value overnight. While Hyundai may offer some compensation, it won't cover the full extent of the losses. Some dealers may attract new franchises, but many will be forced to close or pivot to used cars, leaving behind vacant real estate. These dealerships are often family businesses, pillars of their communities now facing an uncertain future. The expertise built over years selling and servicing Hyundai vehicles is suddenly non-transferable. Legal battles are inevitable as dealers seek compensation for destroyed goodwill and breached agreements. Franchise laws offer some protection, but the complete withdrawal of a brand is a legal gray area. The coming litigation will be costly and emotionally draining, compounding the devastation for thousands of business owners and employees. For many, Hyundai's exit is not just a financial loss, it's the end of a legacy. Behind the corporate language lies a human tragedy. The closure of Hyundai's Alabama plant means over 3,000 lost manufacturing jobs. Real people, real families, suddenly without a livelihood. The ripple effect hits suppliers, logistics firms, and local businesses, multiplying job losses across the region and beyond. Dealership closures threaten tens of thousands more jobs, sales staff, technicians, and managers, many with brand-specific skills now rendered obsolete. Technicians face costly retraining while white-collar professionals at Hyundai's U.S. headquarters and tech centers are made redundant. The loss of these jobs scatters talent and institutional knowledge across the industry. For thousands, Hyundai's withdrawal is a personal economic disaster, forcing them to navigate a tough job market. Communities that relied on Hyundai for stability now face economic crisis. The human cost is staggering, families uprooted, careers derailed, and communities left searching for answers. This is more than a business decision, it's a blow to the American middle class. Hyundai's exit triggers a domino effect through the U.S. economy. Suppliers dedicated to Hyundai face sudden, catastrophic losses, threatening their survival and the jobs they provide. Overcapacity will drive down prices, squeezing margins and risking bankruptcies across the supply base. Logistics, advertising, and financial services firms lose a major client, while local and state tax revenues take a hit. The loss of hundreds of millions in annual taxes will strain public budgets, risking cuts to essential services. The economic void left by Hyundai weakens entire regions, creating long-term challenges for local and state governments. This is not just about lost jobs, it's a structural blow to America's industrial foundation. Hyundai's exit creates a power vacuum, and competitors are already moving in. Kia, Toyota, and Honda are best positioned to capture Hyundai's market share, especially in affordable sedans and SUVs. Kia, Hyundai's sister brand, must reassure customers and dealers of its own stability. Toyota and Honda will aggressively target Hyundai owners with loyalty offers and trade-in bonuses. American brands like Ford and GM may benefit, especially in the EV segment, as Hyundai's Ioniq models disappear. The battle extends to dealership real estate and talent as rivals seek to absorb prime locations and experienced staff. The automakers that move fastest to integrate these resources will win the most customers. The fight for Hyundai's market share will reshape the competitive landscape. For rivals, this is a rare and fiercely contested opportunity. For consumers, Hyundai's exit means fewer choices and likely higher prices. Hyundai forced rivals to compete on price and features. Now, that pressure is gone. The used car market will see a short-term glut of Hyundais, but long-term owners face plummeting resale values and uncertainty about service and parts. Hyundai's pledge to honor warranties and supply parts is met with skepticism as logistics become more complex. Finding qualified service will get harder as technicians move on, and independent shops hesitate to invest in an orphaned brand. The loss hits price-sensitive buyers hardest. Hyundai was a gateway to affordable, reliable transportation. Its 10-year warranty and value proposition disappear, leaving a void at the entry level. As rivals focus on higher-margin vehicles, it becomes harder for Americans on a budget to buy new cars. The market just got less accessible for millions. The US market has seen brands come and go, but Hyundai's exit is on another scale. Past departures, like Peugeot, Renault, or even GM's Saturn, were disruptive, but none matched Hyundai's size or impact. Once a brand leaves, history shows it's nearly impossible to return. Unlike GM's restructuring, there's no parent company left to soften the blow for Hyundai's dealers and customers. Struggling brands like Mitsubishi and Fiat highlight how tough the US market is, but Hyundai was succeeding, making its exit even more alarming. The message to other automakers: if a giant like Hyundai can't make it work, the barriers to entry are higher than ever. The market is unforgiving. Brands that can't adapt or bear the costs of regulation and technology are forced out. Hyundai's withdrawal isn't a story of failure, but a strategic retreat that signals deeper challenges ahead. The industry must heed this warning. The future of the US market may be less promising than it appears. Boardrooms everywhere are taking note. Hyundai's departure marks a pivotal moment for the US auto industry. The immediate fallout: lost jobs, shuttered businesses, and millions of consumers facing uncertainty. The supply chain is disrupted, and the competitive landscape is permanently altered. Governments must support displaced workers, while legal battles and aggressive marketing campaigns unfold. The cost of the EV transition is immense, and Hyundai's retreat signals a reassessment of the US market's global appeal. As the dust settles, the industry faces a less dynamic, more expensive future. This is a stark reminder of the brutal global forces shaping the auto industry. Is Hyundai's exit an isolated event, or the first sign of a larger shift that will reshape the American automotive landscape for years to come?